good afternoon and welcome back from lunch. I'm Anna Maria Harrison, a partner at Adam Street. In terms of relevance for our topic today, we're a 32 billion size manager investing in venture capital since the early 70s. We invest about 20% of our 3 billion per year in either early stage venture funds or directly into companies. So very exciting to moderate our discussion today. We will be discussing business models and the trade-off between profit and growth. And we will be using Cabify and Uber as examples with a focus on the Iberian market. So we have 30 minutes, 20 minutes for discussion, 10 minutes for questions at the end. So we have Juan Galiardo, who joined Uber in 2014. He's the head of Spain. And Juan Garcia, another Juan, so Juan Ignacio, we're going to call him today. Juan Ignacio joined Cabify in 2013 and has had various roles there and is currently the CFO of the business. So maybe to start and to put it first from a top level perspective, these are very successful businesses. One is a unicorn and the other one is either a dragon or a titan, whatever name we're using nowadays on type of businesses.
If they say so.
Yeah, they're in the same sector, but they have gone through a very different journey thus far. So to begin, I'd like to open it up by having each of the Juan talk about a little bit about themselves and their business models.
Well, thank you very much. It's a pleasure to be here. I guess that many of you already probably know about what Cabify is, in the sense that you probably use us and you hailed a car sometime with us if you travel to Spain, Portugal, or Latin America. For the sake of introduction, that's where we operate. This is the region of focus, Spain, Portugal, and Latin America. We are the leaders there. We've been around for 6 years. Our main shareholder is Rakuten, the Japanese e-commerce company. We also have venture funds in our shareholding, namely Seaya Ventures. And what you probably don't know that much is that our vision or our goal of becoming a safe urban transportation alternative goes beyond what you may have tried in terms of hailing a black car. And now we are offering a big portfolio of alternatives to move around the city, always with a focus on safety and quality. So back in April 2017, we acquired a competitor, Easy Taxi, that operates mainly in Latin America. So now we compete with the two different brands. And we also operate via a joint venture with our partner Glovo in LATAM for delivery of goods in the urban environment. And as well, we are launching several other projects in the world of mobility. I'm very excited to tell you that in the next couple of weeks, we will launch a motorbike sharing app called Movo that will be available initially in Madrid and then scale around many other cities in our geographies. And so we are kind of a urban transportation company with a vision of replacing personal or private cars with a strong focus in moving conveniently, safely, and with quality.
So I also hope some of you have used Uber in some of the 600 cities that we operate around the world. Much has been said about the company, but I think most recently the vision of our new CEO of Dara is really what gets us more excited for the years ahead. I think the idea in a nutshell is to become the mobility platform of choice for everyone in cities around the world. And the idea is to help people from one single app access a wide range of transportation options. We have obviously started with cars, but as Dara mentioned, we hope that cars are to Uber what books were to Amazon, and that we can connect in that same app things like short-term rentals of cars, bicycles, motorcycles, and a lot of other options. We recently announced the acquisition of Jump, which is a startup that does precisely that. They do semi-dogless bikes. We started a pilot in San Francisco very successfully, and we're hoping to expand that to other places around the world very soon. Ticketing platforms to buy train tickets, etc. So becoming a way the one-stop shop solution for you to move around. And definitely agree with what Juan Ignacio was saying. The ultimate objective is to help people get over private car ownership, to give people an alternative that is reliable and affordable, so that people can leave their cars home and don't rely in a way, or don't depend on private cars. And for that, obviously, the logical next step is to put more people on the same amount of cars, so that you can lower the price. And this is what we're trying to do with services like Uber Pool that you might have tried in London. You guys probably don't move around in Uber Pool, but lots of people do in London. And obviously down the line as well, through driverless cars, no? Which is obviously the next frontier when it comes to urban transportation, hopefully building on that same narrative of safety and convenience and reliability.
Great, thank you. Now, moving into the profit and growth conversation, and in particular looking at outside investors and the impact of that has had in your business. Both of you have raised substantial amounts of money in the very recent past as well. So we're talking about 400 million, 21 billion. How have those investors influenced you in terms of the decisions that you have made to prioritize growth or profit? And what I really want to get into here as well is we invest in European funds that tend to focus a lot more on profitability and pushing the companies that they invest in to be profitable earlier on, whilst the US funds that we back tend to focus mainly on growth, scale. We're not going to talk about the reasons for that, but it's mainly how has that affected your business and your model.
Mm-hmm. Well, in the case of Cabify, basically we have a culture of building consensus about every decision that we make, and our cap table is a reflection of that. So it means that the people that we brought on board or that wanted to jump on board with us and invest in our company were willing to be part of the way we were leading the company. So in the end, all the decisions that are taken in the board have a broad consensus. They're normally, put forward by us, the management team, but in the end, everybody agrees on the strategic lines that we follow. So that's super important for us, and we got very strong support from all of our shareholders, especially, obviously, Rakuten and Seaya, which have been our top companions in this ride. So there have been times where we had to push a little bit towards being more profitable, profitable in the sense of being leaner in how we manage the company, so using less resources to make more volume. And then there have been other times, like for example in 2016, where we launched a lot of new cities and markets across the Latin American region, where we had to focus more in growing, in getting things done rather than making money. And our investors have been supportive in both worlds, depending on what was needed at that time. Being Seaya, for example, a European VC, when they got into this project, it was kind of unusual for them because they were used to other kinds of or less investment-heavy sectors. So they made a bet here. They knew that this was going to be a bumpy ride, and they were willing to take this bet. But it's true that it's not the typical investment that they make.
Juan?
Yeah, well, I'd like to start by saying that your point definitely does resonate. We probably have more experience on the US side, but definitely the VCs that initially made a bet on Uber, such as Benchmark and others, Menlo, etc., definitely put a big priority on growth. And if you look at the curve, kind of the number of cities that we launched in the first 3 years of business was was quite remarkable. But I think the biggest point that we realized is that growing so fast obviously does put a lot of pressure on a number of kind of areas of your business. Financials is definitely one of them, but I would argue your team is probably a bigger element and a bigger bottleneck often. And for us, it was definitely a bigger challenge to find the right people at the right time and at the right pace than finding the money and the funding to continue fueling the operation. And I think the results also of such an accelerated growth on your company, you have so many new managers in the company, and the structures that organically kind of crystallize as a result of such a fast growth can be very problematic in the long run. And I think as part of the most recent investment, which some of you might have read from SoftBank of around 8 billion, was definitely around governance. One of the elements was about migrating from a structure that is very characteristic from these same VCs of having a super voting rights to a structure of one vote, one share, one vote, which was one of the conditions for the most recent SoftBank investment, as well as the type of board that you're building. I think that's a crucial element, and when you become so big so quickly, it's definitely not easy to develop a board that is kind of state of the art and is comparable with the boards of other big public companies or to be public companies. So expanding the board as part of that investment, I think was also crucial. And I think we're all very happy about the outcome of the SoftBank investment and the kind of the path it puts us towards IPO.
And Juan, can I follow up on that? And there's been a lot of news about a potential IPO in the future, in the near future. And how has that affected the I guess the push or the focus on growth versus profitability metrics for Uber?
Yeah, we were commenting on it shortly before. I think it obviously has an impact, but I don't think it has been an abrupt impact at all. I think it has been the logical next step and has been a gradual shift, I think, from more growth-oriented to more profitability-oriented mindset. But I think the key thing that we've done right in this approach is that we haven't tried to do a kind of a blanket approach across the company. At the end, when you're operating in 600 cities around the world in so many countries, and especially in this sector where regulations are so different and they play such an important role in the business, you end up having countries that are hyper-developed with very high penetration, such as the US or other markets, and you have countries where penetration is very, very low. Spain is probably a good example, where penetration is probably below 1% or in the range of 1% or 2% of the population. So if you try to apply the same policy across the board, you're probably going to miss on many interesting opportunities, and I'm very glad to be able to say that Spain is definitely not one of these cases. Spain is one of the strategic markets for Uber worldwide, one of the key markets we believe we can help unlock together with many other players in the sector. And we're grateful to be given this opportunity to continue investing heavily in Spain to turn it into a successful business like many other examples in Latin America, where we have a very big business, Brazil, the US, etc.
Great. So now getting into more in-depth about the profit to growth conversation, I found very useful. I don't know if all of you have seen the descriptions of the businesses here. So I'll just name a couple of key points. So for Uber, the mission is to bring transportation to everyone, everywhere. So we're talking scale, growth. For Cabify, some of the key words that really resonated, it's service, reliable, safe, efficient, could be financially efficient as well. We'll ask CFO now. Quality. So can maybe start with Cabify. How has this, I guess, strategic view and mission statement shaped you and also potentially hindered you compared to other competitors that are focused on growth?
That's a pretty good question. As you said in the introduction, we are a unicorn, but not a whatever kind of beast you might call Uber. So basically, our resources or the amount of resources that we have is limited, meaning that we need to use them very well and be very efficient in the way we use them. So here in general, you have two options on how you tackle the market. Either you're super lean, super efficient, and try to get as much volume as you can, or if you have limited resources, you have to be very efficient, of course, but you try to give some extra value that the market being both the drivers and the users can buy, so you can extract more value and get a higher margin that goes to the bottom line. So in the end, we thought that our strategy had to be less risky than our competitors, meaning that we should have a long-term view in the way we interact with users, drivers, regulators, and in general all the stakeholders. And so that's why in the first place we have a long-term approach with regulators. We engage in long-term contracts with drivers and partners, and we also have a corporate B2B orientation, meaning that around 25% of our revenues come from corporate clients, and that's the way we did to extract more value. So, for example, back in the end of last year, we introduced a review of tariffs worldwide, where we increased our take rates, and basically our users didn't mind at all because they were getting the same exact safe, reliable, and good quality service that they were getting before, and it seems that the demand is kind of inelastic to price when it comes to this higher end user. So that's the way we faced the debate of how to match profitability with growth.
And now, Juan, moving into, can you actually grow a business really fast and have the foresight to look at the potential risks and mitigate those risks as you grow? And how are you set up to do that here in particular?
So I think you definitely can, but it requires a very state-of-the-art governance and a great team. I think that's, at the end, businesses are mainly about people. I think we've definitely made mistakes in the past, and the approach of the company worldwide has changed a lot. I think the introduction of the new leadership of data has changed a lot. You mentioned some of the things about partnering with cities. I think that's definitely a term that we hear all the time now internally, and how we do things, how we launch a city, how we interact with policymakers. I think there's been a dramatic shift. I think you can definitely do it. Again, I think the point is about being smart and knowing when investing in a market makes sense, and how and just as an example, one of the line items that obviously weighs more when you're operating in a market, in a ride-sharing business, is subsidies, and a lot has been said about this. And I think it's not about subsidies being right or wrong, it's about how you use it. Data has been talking a lot about our Uber Pool service, and the next variation, which is Pool Express, which maybe some of you have used in the US. Basically, the service asks you to basically walk for, let's say, 50 meters to a main street, so that you can catch a car that is going already in that direction, as opposed to the car having to do a U-turn and enter into a less, kind of more crowded street, no? And how you can reduce price around that. So investing money to help people get familiarized and understand that service more definitely makes sense. Now, spending a lot of money on subsidies when your competitor is much bigger and has outperformed you through efficiency, at the end of the day, as we were saying before, this is about efficiency. It's about being big. It's about being super efficient in the number of trips that cars can do and what that means for price. So sometimes investing when a competitor is more efficient than you in a market doesn't make sense. No? So I think it's about having the right team in place to be able to tell one from the other and make smart investments, not just not so smart investments.
Yeah, no, makes sense. And Juan, on Cabify, growth has been great. There's profitability talk. There's also lots of plans to consolidate, to increase market share, to barriers to entry. I think you are the two leaders in the market here. What is next, and how can you balance both?
Well, in the end, consolidation is an ongoing discussion right now. I mean, there have been a couple of deals in some markets when there's kind of a debate on whether this is a winner-takes-all market or there could be several options, especially in the bigger cities and so on. So what's to come on that, it's a little bit early, but definitely what's on the agenda is that probably all the crazy subsidy wars that had been happening for the last 5 to 6 years will tend to rationalize. We'll see in the industry people, I mean, the sector is growing a lot, so it's still growing, and the penetration is super small, as Juan said. So there's a kind of a big market forward, and it doesn't make sense to be kind of killing one another by paying subsidies here, there, and everywhere. So consolidation is definitely in the agenda for everybody in the sector. But I mean, we'll see the way this carries forward. For example, back in April 2017, we acquired our competitor Easy, because in the end it made sense for us to complement our offering. We didn't have taxis. We didn't accept cash because of safety matters. Easy had a very advanced governance to make sure that cash rides was safe. So in the end, it made a lot of sense, and it was a very complementary business. But in the end, consolidation can't just happen because we need to be profitable or because the business has to be turned around. It has to make sense. So this will be an ongoing process that will probably last many, many years.
Right. Can we now open the floor for questions? Yeah.
San Francisco. I just wanted to ask, what are the optimum demographics when you look into a fresh market, and what makes you salivate?
Okay. So I think in the past, early adopters of our service have tended to be definitely younger people in their 20s, 30s, very tech savvy, big adoption obviously of smartphones, very used to kind of doing lots of things through their smartphone. But what we're seeing, especially in more mature markets, is that both on the rider side as well as on the driver side, the demographics are really very broad, and we see in the US as an example, we see a very big amount of veterans, for instance, driving with Uber, huge amount of veterans driving with Uber. So I think it's such a simple and universal thing that I think that the demographics are very broad. Here in Spain, obviously we're at a different stage, so we're seeing again just the tip of the iceberg on those segments, but we're very optimistic that once you try out the service and you see how little hassle it is not to have to park your car and not to have to drive it around, etc. I think we're going to see lots of older people as well, and lots of other segments very interested.
Yeah, I totally agree with that. If I were to add a little bit on that, I would say that this is a very, I mean, the service scales very well in big cities where there's a big network effect, but the demographics themselves of the people that use the service actually don't really matter that much, or don't matter as much as the need for the city to improve its transportation. So in cities where public transportation is a pain, and we've seen that in many cities across Latin America.
Mexico City, for instance.
Mexico City is a very good example. Bogota. We've seen people of every kind of people using these kind of services and platforms.
Thank you. Rafael Lopez Aparicio. I wonder if you, I mean, the word consolidation and also regulatory has come to the panel just a few minutes before. I wonder if you can, since we're talking about growth and profitability, and realizing that the Amazon example is a good one, you know, when you're talking about passenger driving as a start and possibly adding a lot of services in the future, what you could comment on licensing and together with regulatory.
So for people that haven't been able to hear, the question is about licensing and regulatory.
If I may really quickly, I think a lot has been spoken for sure about Uber and other competitors and regulations, especially in Europe. And I think as our CEO has said very recently, we definitely want Uber to be regulated, but of course we want it to be regulated in a reasonable way. And I think in Spain in particular, very often we confuse, very simply put, the requirements to access a certain profession or a certain business and artificial quantitative limits that you put on it. So for instance, obviously, I don't think any of us would want, or put it that way, we would both want drivers to have a certain type of insurance, a certain type of training, a certain type of background check, cars to be electric and so on and so forth. And as Uber, we're definitely keen on pushing across all the cities that we operate those type of requirements, as long as they obviously add to safety, et cetera, et cetera. What we don't agree with is putting artificial limits on the number of people that can access that profession. This is what has generated this big debate in Spain and in other places like New York around the value of taxi licenses, for instance. Why are taxi licenses, why do they cost 150,000 euros? That money wasn't paid to the government. That money was paid to another taxi driver that got that license for free at some point. So obviously, if you put that artificial number and you limit the market in that way, you create all sorts of distortions that only benefit the initial incumbents. And in the case of Spain in particular, we have been defending, since we have been in the market, a liberalization of the market, not understood as sometimes people in the sector want to portray it as not having rules around the service. Not at all. We definitely want rules. We want rules on insurance, on the drivers, on this and that, for sure. What we don't want is a limit on the number of people that has no justification for the common good other than keeping a monopoly of the incumbents that got that license for free.
It's a very complex debate. I mean, you have around 7 billion euros of investment here in Spain, and these are mostly individuals that kind of got a mortgage and they're like deep in debt. So it's while you could argue that a liberalization in the long term would be better for the sector, this is not something that you can do from night to morning. In the end, for us, Cabify as a platform, the regulatory debate has become less and less relevant over time. We operate in Latin American countries under a fully liberalized environment, and we are very happy to do that. So there we focus in leveraging our safety, quality, and so on differentiators. Here in Spain, we operate under a kind of highly regulated market. And I say kind of highly regulated because it's not as strict as it seems. Basically, we've been operating here for 4 years, growing. Obviously, there could be many more cars on the street, as there will be in the coming 24 months. But then in the end, what we have to do is to work in giving the best alternatives that the regulation in each of the countries offers, be it black cars, be it motorbikes, being car sharing, or whatever, to move people safely and reliably according to the rules of each of the countries.
For sure, but just to conclude, I think, again, it's not on the amount of regulation. I think sometimes the debate is simplified too much as to no regulation or a lot of regulation. Again, regulation of a service like urban transportation is definitely something that makes sense. This is why many countries across the world, not only in Europe but in other places, have been doing it. It's about regulation keeping ultimately the benefit of the entire population into account and not the benefits of a handful of people. And again, fully agree with you, Juan Ignacio. It's a complicated debate that cannot be solved overnight. This is why we talk about transition, not about an immediate change. And it's a change where all the parties involved need to be present: government, regulators, the taxi sector, etc. And hopefully in the next edition of the Private Equity Conference here in Madrid, we can speak about a taxi product as well, because technology could be applied to taxis as well. No? Why not?
Great. Any further questions? If not, I have one more for, I guess, in terms of the advice that you would give the audience. And I'm not talking about ditching the suits and moving to the other side. I'm talking about, would you encourage business owners and business entrepreneurs and to push for profitability earlier than what they think they should be? Yes, no, and maybe a quick why.
No, and yes. I mean, in general, no, because in the end, you have to grow a lot in the first steps of your business. But what you have to always have insight on how your business is going to be in the mid to long term. So you have to make sure that the business that you're building will be profitable one day. So you always have to think about, well, look, these subsidies or customer acquisition money that I'm putting into the market right now, does it make sense? Maybe I'm incurring a loss right now, but then in the end, this business with more scale will be profitable because I will not need these subsidies now. So that's something that you always have to keep in mind to make sure that the business that you're building is sustainable in the long term. Like, for example, structure costs. Maybe you should keep them at a size that allows you to grow for the next X months, and then make sure that you scale it because it makes sense, because the market is going to be there. So these kind of things, and some financial control and discipline is very important for growing a business healthily and reliably.
Yeah, I couldn't agree more. I think that's the key, is about making sure that you're moving towards a profitable business, and that the investment is required to get there. But obviously a business that ultimately is not going to make sense, definitely throwing money in is not going to solve the problem at all. It's just going to, money can only get you there, but cannot change the unit economics. So if you don't expect the unit economics to add up 6-12 months from now, then you probably need to rethink the business model and not solve the problem through money.
Thank you very much, and thank everybody. Please welcome and join me in thanking our speakers today. Thank you.